Okay? All right. So let's talk about what we're going to do today. We're going to talk briefly about some of the assumptions about being a trend following type of a trader. We're going to talk about what we do and the indicators that we use to do it. Then we'll actually talk about some of the setups that we use. We're going to talk about the importance of confluence of our indicators. I'm going to show you some live trades throughout. And then at the end, I've got a free gift we're going to give all of you, and then we've got a webinar special offer. We're going to take a quick break because after about an hour or so, I think all of us coffee drinkers want to go take a break. And then after the break, we'll come back and I will answer all your questions. So if you've got questions as we're going along and you want to make sure that I see it, write them down. Try to remember them or write them down on something and then remind me or ask me after we come back for the question and answer. I will stay for as long as you have questions and until your questions are answered thoroughly. Okay? So if you don't get the answer you want or that you're looking for, keep asking in case I don't understand. All right? All right, first of all, a little bit about me. So for those of you that don't know me, my name is Tony Peterson. I started the Intentional Trader a number of years ago. My background is not in trading or finance or anything to do with money or the stock markets or I didn't work at a brokerage firm or any floor trader, none of that. I'm just a regular guy who got tired of his regular job and was looking for something else. I wasn't really looking. It found me. And actually a customer of mine introduced me to trading. And at first I wasn't interested. And then it just kind of grew on me and I got curious and I started trying to learn more about it. Interestingly enough, the customer never really made it in trading and he quit not long after he showed me what he was trying to learn how to do. Which is probably at some point a picture. That's fun. That picture, tell them how old that picture is, Lisa. That picture is, I don't know, a month old. I finally got new pictures. Yeah, it's about a month old or so. So I was I decided I got bit by the trading bug like everybody else, and I decided that I was going to really give it a go, and in 6 months or so I'd be, profitable and able to replace my income that had taken me up to 20 years of contracting to get up to, that level. And I figured, 6 months easy, because I'm really smart. So 6 months, I can do this. And you know how that works out. 7 years later, I've lost a ton of money. My guts are completely raw from just constantly being kicked in the gut. But I always felt like I was so close. I was so yeah. I've heard that before. I was like you, Jay, absolutely. And I've been told actually Jeff Foxworthy lives not too far from me. I'm in the Atlanta area. But then something really big happened. All right, something really big happened, and we can talk about this when we go to when we get to the question and answer period. So since then, I've been a professional trader, kind of a reluctant trading educator, and not reluctant, but it wasn't that I actually planned on it. It was an accidental trading educator, and ultimately system developer and indicator developer. Okay. All right. So assumptions. Let's talk about trend trading and some of the assumptions that many of us have tried to make about trend trading, or that the assumptions we are making when we go into trend trading. First of all, you're probably going to figure that at the present time, it's more likely a trend is going to continue than reverse, right? Because the past performance of the market is pretty indicative of, or that's the best way that we have to predict what's going to happen in the future. So there's a lot of people that, it's the conventional wisdom. There's so much of this conventional wisdom's out there that when we start looking for this trading education, and you and I have all looked in the same places. We've gone and searched the same forums and read the same books and watched the same videos, and we've done all the same stuff. So we're all soaking up the same information, and the trend is your friend is one of those first things that you learn when you're trying to become a trader. But one of those assumptions about that is that you have the financial and emotional ability to withstand everything that comes with trend trading, like the false starts, the shakeouts, the late exits, the early exits, the retracements, the consolidations, and on and on and on. All those things that can cause you to suddenly lose your mind, stop trading your rules, and just bail out because you're scared. All right. The other assumption about trend trading is that the trader has a higher risk tolerance. Now, that doesn't sound like it makes a lot of sense, but if you think about it, most trend traders are looking for these longer runs, right? They're looking for these longer tick runs for their trades. Now, what happens in this day and age that when the longer you're exposed in the market? The markets, if you don't know this, are manipulated all the time by the big money. We're going to talk about that a little bit in the future, a little bit later on. But the markets are manipulated all the time by the big money guys. And the longer you have your money exposed in the markets, the higher the probability these guys are going to get it from you. All right, so if you're a trend trader, you're going to want to get in and ride it for a while and hope like crazy that these market makers don't come in and take you out. All right, so this is an assumption about being a trend trader. All right, and then finally the idea that you have absolute, complete, and utter confidence in the system such that you will follow every rule all the time without fail, and that when things start going wrong and you start getting scared, you can trade without emotion. You can trade like a machine. You can make sure you don't break your rules. All of those things. That's an assumption about trend trading. All right? And I can tell you, you can't trade without emotion. You can't trade like a machine. You will fail at not having emotion. It can't be done, especially when you're learning. All right? So, here's a nice little trend. So, there may be an opportunity here for using a particular type of trading system, whichever trend trading system you want to use. There may be an opportunity here to have gotten in early on this trend and ride it down to the bottom, from top to bottom. But the problem is if you haven't hit your target now and you're continuing to ride this trend, it's just going up and down, up and down, up and down, but it has a longer term direction. But so it's, okay, it's still going up and down, and here you're thinking, okay, well, it's going up and it's going down again. Well, it's going up a little bit. Well, what happens here? Maybe you've entered over here and now you're over here. So what do? You just ride it out, or panic, or go, oh man, I was already ahead. I should have gotten out. I could have had all this money. And now now I'm screwed. I'm falling behind. So rather than looking for that one opportunity, We're looking for the high probability trades within a trend that shows us that we can see when price stops and turns within that trend. Now, I'm not looking for a big home run during that trend. I'm looking for these opportunities where something happened. Something happened. You'll notice that it just stops for no particular reason and changes directions. Well, those are all opportunities. If we can figure out what is the thing or things that happened, look how many opportunities we have for successful trade. Now, do we need to get good at hitting these long home runs, or do we need to get good at these really small, quick changes in the trend? All right, so these pullbacks are very important to us, pullbacks from a trend. So trends are important. We need trends. But it's the pullback, it's the predictable pullback, it's the nature of their predictability and when the pullback is going to happen. So I just started looking for, how can I find out what's going on when suddenly price stops and turns? So I started looking, and I started using things like momentum and exhaustion and volume spread analysis, which is very interesting. I'm going to go over that a little bit here in a few minutes. Tapering and divergence and confluence. All right, these are all parts of a system that I use for trading these pullbacks from every trend. Every trend has a series of pullbacks. Every single one of them. There is no trends without some sort of pullback. All right, so the pullbacks are actually, if you look at a trend, the pullbacks happen in a pattern. And if you can pick that up and know why it's going to happen and what your competition is likely to do next, then you've got an edge. And this is where we found our edge. All right, so here we've got price that's moving from down here to up here relatively quickly, right? It's happening over just a few bars, but we've moved a long way. Well, price cannot maintain that type of momentum without it pausing to rest. At some point, price will stop and rest because it is what we call exhausted. It's moved too far, too fast, and people start getting apprehensive and fearful of what the cause might be, and people start cashing out. They start jumping out, which causes price to start dropping, right? So we've got this momentum where we're charging up really hard and fast, and we know that people are going to start getting nervous getting up this high, right? So at this point, we've got exhaustion. But how do we know where this exhaustion is taking place? How do we know it's not going to just push forward? Well, we've got a few ways of telling that. Let me make sure I get the right video up here. Oh, looking at the wrong thing. Of course, I had this all ready, and then I messed it up. Now, some of these videos are actually going to be taken from our daily trade room video screen. I'll show you that in just a few minutes. It's a little grainy because it's actually pretty small on the recording. I did some of them where it's not as grainy, but I kind of ran out of time. So here's a video of a first touch trade setup that we use momentum and exhaustion for the trade. All right, so you'll notice now we're climbing really hard and fast. Price is moving very quickly. So something is happening to drive price up here. Now, let me stop right here. We've hit one of our lines of resistance. This is the line we call FT reset. We'll talk about that in a few minutes. This is our major line of resistance. It's actually based on floor trader pivots. But you can see that we've got a little zone around. I don't know if you can see that or not. but we've got a zone around it. And then what more importantly, we've got these numbers here at the end of the line. Now these particular numbers, there was no number there as we came up because price has not touched or crossed this line during this trading session, meaning this line is as strong as we're going to expect it to be. These lines are based on floor trader pivots, which is what most people that trade using support and resistance watch. That's why we watch them. What gives them value? Why do they work so well? Because people think they do. So for whatever reason, people believe that there's some sort of resistance there. It's kind of a self-fulfilling prophecy, you know. Enough people are watching these lines. So these are the ones that I want to watch because I know that others are watching them and they're bound to react to them. Well, the most natural place for price to rest or pull back or pause is going to be at a major line of resistance. So it's very common for us to see something that looks like this. Sorry if it's a little blurry. Again, this was an FT trade I took in the trade room the other day. I don't know if it's yesterday or someday this week. Now, this is all I'm looking for on an FT trade. I'm not looking for it to run a long way. I'm looking for that initial reaction where, first of all, people start going and they get freaked out. They're like, oh my gosh, price has moved too far, too fast. It's overbought, which we'll talk about. That's this pink outline. Price has become overbought. It's now slammed into a major line of resistance. So people start just bailing out, or at least waiting to see what everybody else is going to do. It's kind of like playing chicken. You know, everybody ran it up to the line and stopped and started looking at each other going, I'm not going to be the one to push it across, are you? So we've got this event where we get this pullback. This is our FT. I'll talk to you in a few minutes about how we trade that FT trade setup. Our first touch. FT stands for first touch. So how do we determine exhaustion? Well, we're going to use what most people use. Again, we don't want to try to use something that's very random, that's our own special. I want to use what everybody else is looking at. And the relative strength index is a very popular tool that people use. It's a momentum oscillator. And it's a very popular momentum oscillator that people use to help them make decisions when price is becoming exhausted or momentum is changing directions. So we've got the RSI here, which is showing us that price is in an overbought or an oversold condition. See these lines? These are the extremes of the oscillator. When price gets into these extremes, it's exhausted. It wants to pull back and go the other way. All right, so we actually paint an outline on the candlestick when price exceeds the RSI oscillator line. Now, you can use these on your own chart. You can use this oscillator. I prefer not to because looking at a candlestick with a pink outline is so much easier to read, and it's much, much faster to read. I don't have to take my eyes off of what I'm doing when I'm trying to make a trade decision. When price is going to come up and hit this FT line, I don't have to look away to find out if I'm overbought or oversold. I know right here, and I don't have to move my eyes from this spot to make a decision on this trade setup. Now, this is an FT or a first touch trade setup. How do you trade this? First thing I'm going to do is I'm going to be watching this bar. I'm probably going to be watching from back at this point as price is moving really hard, really fast. And I see this line. Now, this line, this number 125, was over here before the line was touched. This 125 tells me that this is a really strong line, that we'd anticipate that price is going to react to that line if price approaches that line in a really steep climb, okay? Really steep climb. It's kind of like a bouncing ball. You want to think about this like the momentum of slamming a ball into the floor or ceiling or whatever, and slamming it really hard and how fast it's going to come back at you, all right? So we're going to be climbing here during the course of this bar, not later, but during this bar, which you'll see, you may have noticed on that video, and I'll show you on another. This bar suddenly goes overbought, turns pink outline, and hits this line. Now, as soon as that happens, I do something, I put in a stop limit order to sell, but I don't put it on right up here, because if price continues to push, which it will sometimes, even though this line has suggested that it's very strong, you never know. Price can just push right through and just keep on going. So I want to see and confirm that price is respecting this line, even though it tested the other side. I want to see that most people don't want to push it across this line. Now, that's likely to take just a few seconds to make sure, or minutes, depending on what time frame you're trading, to make sure that this line is being respected, okay? So to do that, I'm going to actually put in, if I had a dome here, I'd put in a stop limit order way down here, just to get it on my dome on the board. As price starts pausing here, I'm pulling my order up, pulling my order up, pulling my order up. And as it's pausing, I'm pulling it up to the point of entry. Now, as price starts to drop, it fills me on the way down. Okay, so I've confirmed that price has stalled and that it's very likely it's going to turn around, because we have this big push here. We have this exhaustion from this big push. We have an overbought condition. We have a major line of resistance, and have every reason to believe price is going to pull back at this point. But I enter this very carefully. Now, I will usually enter on this bar. Many of the more conservative traders in our trade room will enter on the open of this bar. They want to confirm just a little bit longer, and they're going to wait for the open of this bar, and that's fine. It's all about your risk tolerance levels. So this is one way that we can very easily trade a trend pullback trade and see, I'm only looking for a few ticks here, but I get so good at it, I don't need those long home runs. I can just pick up those little ticks, those 5-7 tick runners, or little shots, and pick up several of them a day. And as I start getting better and better and better at them, I can just increase the number of contracts. The beauty of this type of trade, it's the kind of thing that you can practice. And I'm going to talk to you more about practice towards the end. You can actually practice this trade for hours, where you can't really practice trend trading. Not if you're planning on these long runs. Okay, so maybe you practice your entry, but this you can practice the whole trade and get really good at it really fast. So we've got our potential exhaustion in those bars. All right, so now let's add to that. I'm going to watch another video here. Let's add another indicator to a similar setup. This is called our speed tick trade setup. This is a trade setup we've been trading for quite some time in the trade room. This has a trigger that is not just a line. It's not just an FT type of a trade, although as it sets up, it'll look very much like it. Again, this is one I took recently. All right. So you'll notice, I don't know if you noticed that first of all, that these indicators print on the current bar. See that? That's a speed tick. This is our speed tick right here. I'll tell you what it's doing in just a minute. But notice it prints as soon as the condition exists. This is not a repainting type of an indicator. So as price drops, we am now, it looks very much like an FT, right? But the logic is very different. The FT was I was simply using exhaustion and oversold condition with a major line of support or resistance. So we're trying to take advantage of people's reluctance. This actually gives us a heads up that there may be something more going on here than just price moving for whatever reason. This is where we pick up where it's very likely that that price is being mechanically manipulated by the big boys. Now, how do we do that? How do I know that? Well, I'll show you. So this would be a very typical, very typical speed tick. Dadgummit. Come on. I know Jeff Foxworthy says dadgummit too, doesn't he? All right, come on. It just won't do it. All right. So this is we're gonna wait for this speed tick to confirm, rather than if this was an FT, I would try to enter on this bar because sometimes the price hits and bounces really fast. But when I think that it's a manipulation by the mechanical manipulation by the big boys, by the smart money, by the institutions, I'm going to wait. And at the open of this bar, as long as it's above this line of support, but within my stop distance, meaning that I wouldn't get stopped out if it went against me before it had a chance to, price had a chance to stall on this line again. So my stop distance would have to be, my stop would have to be somewhere on the other side of this line of support. This is actually minor support. This is the low of the day. So we have two support lines here. And notice how price just stopped dead right on our support line. We see that a lot. At the open of this bar would have been my entry. And remember, I'm only looking for a little bit because I can anticipate that this is going to happen all the time, over and over and over again. You see another indicator here that is kind of a supporting indicator. This adds confluence to our trade. And I'll talk about this one. This is our pullback alert. It's based on volume spread analysis. We'll talk about this in a minute. I can pull these up later also, and I have some others that we can during the question and answer time. So again, this is our speed tick setup. Now here's an interesting one where we've got a very much the same, doesn't it? It's a totally different setup, but it looks very much the same, which is great because they're very easy to see when they present themselves. We in the trade room we say, yeah, we're just waiting on the bus. There's nothing to study. There's nothing to analyze. It just shows up, and it's right there in front of you. So we've got a speed tick trade. We hit our major line of resistance. Now, we had the opportunity to enter at the open of this bar, which I probably would have. There are a number of traders that are going to wait until the open of this bar for that trade. Again, it depends on your risk criteria. If you're a very conservative trader, you can trade our setups. If you're a much more aggressive trader, you can trade our setups. All you do is you just change your style of entry, depending on how you like to trade. Now, I suggest anybody learning a new system is very conservative until they get comfortable with it. And I encourage people that come and join us in the trade room to be very conservative. Now, a lot of them get very excited because they see how good our indicators work, and they start really wanting to get more aggressive because they just feel like they're missing so many opportunities. And that may be true, but still, there is no holy grail, and Not every indicator always indicates when a pullback is going to happen. So we have to qualify these with very specific rules for your risk tolerance levels. And each of our setups has that. Now the speed tick, the way that we go and we try to identify what the big boys are doing, what these HFTs, high frequency trading robots or algorithms, we can't really see what they're doing before they do it. Now, we can kind of get a general idea what might be coming up soon, but not very definitively. Now, to be able to do that better, we've gone to start reading the tape. Now, I think most of you probably know what tape reading is. Back in the day, that's what the regular traders were trying to get a handle on what the big boys were doing. And so they would start reading the tape, and they say, okay, the big boys are loading up. It's time that we do whatever we're going to do based on what the big boys are doing. Most times back then, they were wanting to follow whatever the big boys were doing, and it was okay because they could do that because things moved much more slowly. So they just copy what the big guys are doing. Today, it's actually the opposite. We're going to read the tape, but there is no more ticker tape. I'll show you how we do that. For many years, floor traders that spent any time on the floor always knew who was doing what just by observing, right? They could just look around. They got to know all these other guys, and they could tell. It's almost like the tells of a poker player, you know? You can kind of just watch and see. That's how the floor traders make big money, is reading what other floor traders are doing. Now, we can't do that, and to a large extent, it's not done as much anymore because floor traders are kind of, in my opinion, they're on their way out. Although some people say, oh, no, they'll always be floor traders, maybe they will. But the electronic trading is really taken over. But we don't have the ability to look into people's eyes anymore. So we've got to kind of figure out how can we tell what others are doing, and how can we read what their intentions are. Now, with these HFTs, these high-frequency trading algorithms, these big, massive supercomputers and all this fast trading, the big money can try to disguise their movements. But because of government regulations that allow them to do this type of trading, they can't hide their presence exactly. I mean, they can try. There are a lot of things they can do to hide what they're doing, and they go to a lot of pain and effort and money and trouble to hide it. Otherwise, if everybody knew what they were doing, then they wouldn't have an advantage, right? Now, the fact of the matter is that if they can't hide, then we can find them. Now, here's the thing. I don't want to copy what the big boys are doing because it's way too fast. Sometimes they trade in milliseconds now, where, you know, it used to be maybe minutes or more likely hours back at the ticker tape days. Now it's seconds and milliseconds. But I can't really tell what they're going to do before they do it. But what I can do is I can study what happens after they do what they're going to do. All right? Richard Wyckoff, the guy who came up with volume spread analysis and a number of other things, he's a world-famous trader from way back. He said the study of responses is an almost unerring guide to the technical position of the market. Responses. This is what the big money is doing. They are manipulating us to do certain things. And then once we respond to what they've done, then they take our money. That's the way it works. So all this that we're talking about today is a study of responses. Okay? And if we know how people respond when things happen, then we have an edge. So if we can tell when something happens, we just got to look to see what happens after that. All right, so I use time and sales now as the tape reading. Instead of reading a ticker tape, we still have the information. We still have the information of the orders that are actually going through the market and what size the orders are, when they go through, and what price, and if they go through in blocks. Except we use time and sales now. Now, there are people who actually sit and watch time and sales windows, and I tried it along with the thousands of other things I tried. If you've never watched a time and sales window, here's a little recording on what they look like and how very difficult it is to actually read and understand these orders that are going through and make any kind of trade decision based on what you're seeing. So even though this is very good information to have, it's so difficult to read. I can tell you what happened to me. Within about 3 minutes, I was hypnotized. And I totally forget what I was doing, and I would just stare at this thing, totally hypnotized. So most people just blow it off because it's just way too much. Unless you spend months and months studying time and sales and how to watch it and understand it and how to trade with it, you're going to end up just saying, well, it's just too much work. But the information is awesome. It's absolutely priceless. So I decided to do a study on time and sales. I collected that data that's coming through, and rather than trying to read all of those ticks and blocks going through, I actually I had a guy create a histogram for me so that I could interpret the orders going through, and I could visually now see it. So this histogram down here at the bottom, down here at the bottom, is a histogram that's basically reading the order flow data. And so it's added to a tick chart, and then I will extrapolate how fast those orders are coming through over whatever X period of time on X type of tick chart in order to read how fast these orders are going through and in what size blocks. All right, so we get to a point where now we've created this histogram. Now, you'll notice when we exceed a certain threshold of speed that these orders are going through, price gets exhausted and turns around. I'll show you why in a minute, why this is happening. But you see, we print a speed tick now. Instead, we don't actually use this histogram anymore. Although this indicator is reading this histogram, we don't use it for trading. You do get it if you bought the speed tick. It does come with it, so you can put it on a chart if you want to. But it's just it's really for just tuning the threshold levels for different markets or chart types or time frames that you want to trade. So what we do is we identify the threshold levels where the threshold exceeds a certain number, and we can identify pretty accurately if the machines are manipulating the market at that point in time, at that exact moment. 10 seconds later may not be the speed at which these orders and these blocks of orders are going through. Okay, so this is actually our trigger indicator. When we see a speed tick trade, if all of the other conditions, all the other rules line up, the speed tick is the trigger that tells us it's time to start getting into a trade or to get into a trade if the other conditions are good. All right, so now we want to confirm. We want to look at some other ways rather than just some of those indicators we've talked about. What are some other ways that can help us confirm that a pullback is likely? So we're not just looking for one way or two ways or three ways. We have a lot of things that we're looking at. Again, going back to looking at a chart and saying, okay, if something happened at this particular point, what can I look for? What can I identify that would tell me that price is going, why it stopped and turned right there. Interesting thing. See this histogram? Same one I was using for the speed tick. We've got another indicator called a ricochet. While I'm doing the speed tick study, I happen to notice that if I had a small bar, and then on the next bar, it was a really tall bar, price turned around. So, I mean, this was just an observation when I'm working on the speed tick. It had nothing to do with what I was working on. It was simply that price, that the speed of the ticks coming into this chart went from very slow to suddenly very fast. And if it exceeded the size of this bar by a certain percentage, I went back in, and after I finished the speed tick, we got that working, and then I went back and worked on this and noticed that, well, I need to alert myself to the fact that this is happening. So we put what's called a ricochet on the chart. We use this as not a trigger, but this is a confirmation or confluence suggesting yet some other data suggesting that price is going to pull back. So even though the data is coming from the same source, it's actually different data. I'm not reading it the same way. I'm not reading this histogram. This was just an observation. This is actually one of Lisa's favorite indicators. She loves the ricochet. All right, so pullback alert. This is another one of our confirmation indicators. This is really an exciting one that I came up with. Oh, I guess it was a little over a year ago now. But I was reading, I mentioned Wyckoff earlier. Well, he came up with the concept of volume spread analysis that we'll talk about a little bit. So applying volume spread analysis to a chart, I just was testing it to see if I could figure out, how to use volume spread analysis in a way that was easy to use. I've seen and I looked for an indicator or something where I could do this, but everything I found was so darn complicated and so difficult to read and took so much time and was generally geared more towards investing than trading that I decided I would kind of recreate or rethink the whole thing and do it for day trading. So again, I created another histogram that helped me with this. It seems to help me think better to create some other tool. And then these dots here are the pullback alerts, and I'll show you how these work and why they work. We actually have a setup called a Rico dot setup, which is a ricochet and a pullback alert when they happen on the same bar at a strong line of resistance or support. We will trade it just like a speed tick. At the open of the following bar, I would have shorted this trade. I would have shorted it. As soon as this bar opened, I put a trade on to go short, as long as it's below this line. All right, so that's a Rico dot setup. And again, Lisa, Praveen, some other traders that are more conservative would have traded it at the open of this bar. Still would have done real well. Now we also have another setup here I'll talk about in a few minutes. This is actually a speed flash setup. This is probably my favorite setup now. This is a relatively new one. Talk about that in a minute. But this is our pullback alert based on volume spread analysis. So what is volume spread analysis? Volume spread, it's using how smart money is manipulating the market and finding those points when they're manipulating the market that something is likely to happen next, okay, based on the reaction of what people are doing, okay, looking at their reactions. But we're going to use, to do that, to determine when people are going to react, we're going to look at, on a particular bar, we're going to look at volume, we're going to look at the price spread, the high and low of the bar, not just the open and close, but the high and low of the bar, and the close price of that bar, okay? This is what we're doing during volume spread analysis. Now, there's a lot more that goes into volume spread analysis that I'm not going to cover. We covered some of it on the webinars earlier in the week, and the video is available at Trader Kingdom if you want to watch it. So what we're looking for, this is a typical bar candlestick. We want to read the spread of the high and the low relative to the volume of that bar, how much of that volume was buying, how much of it was selling, the previous bar activity, and the type of price action going on inside of that bar. So if you want to think about this as reading price action, that might make it a little bit easier. When you get a certain type of price action, then that's kind of like reading, that gives you a clue what's going on with the buyers and sellers. So this volume spread analysis, the simple definition for how we use it is reading the price action. Okay? Now, told you we talk about how the smart money manipulates, and this is a very scaled down, very brief version of how this happens. And this is just one example. They actually do it in many different ways, but this is the most easy way to understand. So you've got these several phases that the smart money is going to manage their trades and manipulate us, our behaviors. All right? First thing they're going to do is they're going to go about accumulating a good portion of the market, of whatever asset they want to buy. Now, they're going to do this during a relatively low volume period. They're going to make it look like nothing is going on. They don't want it to look like the big boys are out there buying a bunch of stuff. They're going to be very stealthy here. They're going to do very low volume, a little at a time. To you and me, it looks like nothing's going on. The markets are dead. Nothing's happening. And these guys spend a lot of money to make it look that way. So we go through this accumulation period. Then they're going to break out of this accumulation, and they're going to go through a small markup. All right? They're going to try to push price up a little bit. They don't want to go too far too fast, okay, because then everybody starts to panic. Little blip up, they can start raising prices because they have cornered the market now. They can pretty much do anything they want. Then they're going to get like an up thrust bar and then back into a accumulation phase. So they may do this many times before they finally get to the final stage. They might do it once, twice, 5 times, who knows? So then they go and they do some more accumulation maybe. Then they'll do it again. And now, let's say they've reached the top. They go into a distribution phase. Again, they want to hide this. They don't want you to know what's going on. They want to start selling off. They bought the majority of it down here, some of it here. Now they want to start making their profits. So during the distribution phase, they're going to make all the profit they plan on making on this particular series. And then at the last minute, they're going to do everything they can to maximize their profit on the holdings they have, and they're going to dump them all on the market all at once, and price, for no apparent reason, is going to suddenly plummet because supply has now overwhelmed demand for this asset. And price will just start falling like crazy, and you and I will start averaging, throwing on a bunch of contracts, trying to get our average price back just in case it came back and we can escape, which accelerates the loss, the price dropping, and it just drops for no apparent reason. You look around and you go, what the heck just happened? Why did that happen? Well, now you know, and you got caught in it, okay? That's their plan. They're waiting for us to react to what they're doing. All right, so how do we take advantage of this? You'll notice there are some things where we get a heads up that they're in a particular phase of this series where we can take advantage of what's likely to happen next. All right, so we get these up thrust bars. When we get an upthrust bar, we get a particular type of price action that happens inside this bar. I'll show you in a minute. So what generally happens, we get this upthrust, and very quickly they want to pull it back and get into a period of accumulation again. Okay? But they got to push that price up in order for it to settle back down in this area. When that happens, we're reading what's going on inside this bar. We're reading what's going on inside this upthrust bar. This upthrust bar, which ends up being a climax bar. The climax bar is the one just before they dump everything on the market. All right? So this is the very short version of how this works and why we use volume spread analysis. Now, if we get just a regular bar and price just, there's volume coming into the bar and orders are coming in and price just kind of climbs, just kind of chugs up. So this is the open of the bar, this is the close of the bar, and nothing much is really happening inside this bar. Price might just kind of drift around a little bit. But there's no churning action. When I mean churning action, what I'm talking about is price runs up quickly and then all of a sudden, during the course of this bar, and it can be way down here, or it could just be up here at the top. You can't really tell by looking at the bar what's going on here if you're just looking at bars. But there's a lot of stuff going on inside that bar. So this bar starts churning with buy and sell orders, big time. When this type of thing starts to happen, this is showing weakness. This is showing that these guys don't want this to continue pushing up. They want to stop it right here so that price can pull back and they can go back into their accumulation phase. Or distribution, for that matter, where they make all their profit. All right, so we can pick up when this type of price action is going on inside the bar. After, see, and this is relative to previous bars. So I'm reading the other bars to determine that we didn't just come out of a climax bar or another upthrust bar or whatever. We're going to be reading to make sure that this is part of this series that they're going through. So we actually have inside the pullback alert indicator, we have 5 different levels that we can read. Now for us in the trade room, for what we do on a 1-minute chart, we only use 2 of them. But they're very accurate on all of them. But you end up getting a lot of signals if you try to use all of them. Depending on what you're trying to use them for, you may want to use some of these low churn bars, the low volume bars, and this churn bar works really good. You just get a lot of them. So what we do, we use the climax bar and the combination climax and churn bar. So you saw on that last screen how this can end up being a climax bar and an upthrust bar. Okay? These will be characterized on our charts by a little dot with a number. The number doesn't mean anything other than it's relative to, this one actually has a 1, this has a 2, this has a 3 on it. This 3 is a combination of the 1 and 2. That's really all the numbers mean. They could have been anything. It just helps us identify the dot. We use them all both the same way, as added confirmation. So now let's talk about another one. Let's talk about probably one of the most powerful ones we have. This one's so powerful, we got people that are just trading this particular indicator. They'll put on a trade just because of this indicator. They feel that strongly about it. The flash is a divergence of momentum. If you're not familiar with a momentum indicator, we'll go back to RSI. We talked about that a minute ago. There are a number of momentum indicators. They're all oscillators for the most part. And what they're reading is the moves in the markets are. And then they will attempt to determine whether that market is overbought or oversold. Okay? Now, what happens is, so this is an oscillator. We're getting into an overbought, oversold, but previously, we were concerned about this overbought and oversold, but that's not what we're reading off of the RSI or the momentum indicator at this point. What we're actually reading is this is an RSI, or this is actually a MACD, which is another momentum indicator. When the peaks of the indicator match the peaks of price, then things are running about normally. Okay, that's very common. For the momentum, for if price is going up, then chances are the momentum is also going up. But when price seems to be going up, yet momentum seems to be falling, momentum very often will lead price. All right, so momentum has turned and it's actually dropping, and price is rising. What happens is price will go, uh-oh, I got no more momentum here, and it'll start dropping off. So if we can get a heads up when we have a divergent condition, then we've got a huge edge. Now, this is one way to try to determine divergence. If you want to try to read this, go ahead. In fact, some of these lines actually print backwards, or they all do. We're reading regular divergence and hidden divergence with our indicator. And instead of having all of these lines and all this mess, we just print on the chart this little indicator saying we have divergence here, and we anticipate price is going to go the other way. Now, this indicator actually prints on the open of the current bar. So this indicator, at the open of this bar right here, this indicator printed on the screen. So it gives you, it's almost a leading indicator. I guess you could consider it one if it's reading momentum and it's anticipating what price is going to do next based on momentum. Okay? Huge. We got people that trade just this. This you could base an entire trading system around divergence. Now, here's where it gets really good. We start combining these things. This is when we combine an oversold condition, exhaustion, a speed tick. Remember, back in our time in sales and our tape reading, major line of support and divergence all comes together. This is our speed flash setup. Let's take a look at a speed flash trade. Where'd that go? All right. Again, this I ran out of time. This came off of our video from the other day. So now price is running up. We've got a speed. We've got a ricochet and a pullback alert and a major line of resistance. So we've got even more confluence here with this speed tick. All right? So price is pushing up into this line, and we see that the line has paused. Now we've got a flash. I would have entered at the open of this bar. At this point, I'm taking a little bit of heat, but that's okay. And there it goes. Now, remember, I'm looking for something that I can that predictably happens over and over. Pullbacks, and if you go back to that volume spread analysis, you can see why this happens, why these pullbacks might be very small, but they're very regular. When these guys are manipulating the markets, they always push it up a little bit further, and then they let it pull back just a little bit so they can go about acquiring more assets. Right? So this is a very typical type of a speed flash trade. I actually have on this particular one, we have another indicator that we're put on the charts in the trade room, but we're not using yet. We're just watching it. So this is a speed flash trade setup, and we see these all the time. This is my favorite setup. We'll actually take these speed flash setups not just off of major support because they were resistance, because they work so well. Here's one with minor support, which is this low of the day, and a major line of support, oversold condition, speed tick, open of this bar, I'm in. And this is all I want. Just this little bit. I'm in, I'm out. I have a bracket order. I limit in, and I have a hard stop. I mean a hard target, and I'm out. Now I do manage my stops. If I had a stop down here, and I entered on the open of this bar because price was above this support, if this bar closed below that support line, but I'm not stopped yet, I'm starting to pull my stop up. So I don't always, you don't just put the order on and forget. We manage our trades. So if the conditions that got me into this trade change, I actually will manage that order so that if it does continue to go against me, I'll take a smaller loss. But I manage it with my stop in the event that price goes ahead and bounces the other way and goes in my favor, then I didn't just bail out with a loss. I still have an opportunity. Right? So I manage it with my stop. Here's one I was mentioning. We will trade this, many of us. This speed flash setup is so strong, it works so well that I don't even wait for major lines of resistance anymore. I'll take any line of resistance, and the high of the day is a good one. This is a minor line of resistance. We don't consider it major, but it is somewhat resistance, and I will short this all day long with any kind of resistance behind it. Again, my entry would have been at the open of this bar. Remember, this is when the flash occurs, at the open of this bar. Probably would have taken a little heat on this, and then it finally dropped. Again, that's okay, well within my stop distance. And another one, you can see when we get two speed ticks, we get a speed tick here and another one here, we actually have two opportunities, or four opportunities, depending on how you're trading it. You can trade it aggressively, or you can, or somewhat less than conservatively. And there are actually four opportunities to enter a trade here, depending on your risk tolerance levels. All right, so the key to all of this, I've showed you a lot of cool ways that we use for determining when these pullbacks are going to happen and why they're so easy to see. People are looking for how do you get into these long trend trades, and they're overlooking all of these obvious places where price does something very predictably. It's not a big, it's not something big. It's not something that jumps out at you. It's not something that most people think to look for. So, but there's so many of these opportunities. Now, I trade on average 5 trades a session. I trade 8:30 a.m. to noon. There are some people that trade less, there's some people that trade more, and there's some people that trade a lot more. It all depends on your risk tolerance. If you want to be a somewhat aggressive trader, which people come, they join us, they come in the trade room, they start getting very aggressive because it's like a kid in a candy store. It's very fun to trade our system because there are a lot of opportunities to make trades. My goal is to be a very consistent trader. I don't like to, I'm not concerned about how much money I make today. My concern is that I am consistently generating a regular income, which is a much easier and less stressful type of a focus, which also makes it so easy to have a bad day. You know, if you have a bad day, it doesn't really matter because today it's not about today. So I'm just looking for a regular monthly income, which is what most people fail to achieve. They start swinging for the fences right away, want to start getting rich, or more likely, they want to start making the money back that they lost. So they start trading for big money, especially if things are going really good. Man, if things are going really good for me, that just means I'm done trading live earlier. I've hit my goal for the day and I'm done. This is a very typical setup for us. This is one we call an LHF, or a low-hanging fruit trade. Look at all this confluence along with the support here. To enter this trade either at the open of this bar or the open of this bar, and up it went. Another example of confluence. When all of these things come together and suggest the same thing, even though they're different sources of data, you've got a major confidence builder. Now, if it goes against you, it goes against you. You still have this awesome information to use to make a trade. If it doesn't work out, that's the way the markets work. Not everything works out all the time. You kind of get your mind around that. But if you just watch these indicators for a while, you're going to gain some confidence just in that they actually do what you think they're going to do most of the time. All right? Now, so how do you master trading the pullbacks? Well, you practice. Practice? How do you practice? All right, so trend traders, how do you practice? You might study. I did a lot of studying. And I may have kind of messed around with charts and kept playing with charts and kept putting things on and whatever, but it's usually with live data during live trading when I'm supposed to be concentrating on trading. I was probably screwing around, adding indicators, trying different things. But my gut says this is going to happen, so I'm just going to jump in here. I did a lot of that kind of stuff. So how do you actually practice? Well, if you're a NinjaTrader user, you practice using Market Replay. And you go, oh, Tony, I can't get Market Replay to work. Oh, it's just such a hassle to download the data. Oh, I hate it. Well, I tell you what. Anything you want to get good at, you need to practice. Now, here's the beauty of Market Replay. If you're just trying to learn something and the only time you spend at it is during the live trading, you're just going to get a fraction of the time that you can spend at something to learn it. That live trading is when you're supposed to be trading. That's game time. That's not practice time. That's not pretend time. That's game time. Market Replay is the single best tool that has propelled my trading almost immediately. When I found Market Replay, it was like the skies parted and the sun came down, and I found out, and I accelerated my learning curve dramatically, and I see people in the trade room and in our mentoring program start using Market Replay, and you can tell which people are using it, which people are practicing. So how do you use it? Here's a screenshot of our trade room. This is what it looks like. We've got 8 instruments, little chart. That's it. That's all we use. That's all I look at to trade 8 different markets. That's it. Now, if you notice on the clock, you see this time up here. Says 9:43 and 45 seconds. All right, so here's what I'm going to do. I'm going to load up a chart. I'm going to put it in Market Replay. I'm going to download the data for this particular chart. This was, yesterday. I'm going to put this clock at 9:43 and 45 seconds. Can you see that? It's real light. I'm not sure you can see that there. It says 9:43:45. Oh, look, that's exactly what time it says in the trade room. I'm going to pull up a DOM. This is an FT trade, first touch trade. These require a good bit more practice than some of our others. This when people talk to you, I say, how much have you practiced? Oh, yeah, okay. Yeah, I need to do that. Because these FTs are fast. And although we have small targets, I don't consider myself a scalper. We call it bunt trading. But this FT trade, it's a scalp. You just want to take what you can get and get out. Now, how do you do that? You got to practice. I can do a month's worth of trading in one evening using Market Replay. And I can practice at regular speed, and I can practice at double speed, 10 speed. I can do it forward and backward, and I can do it 10 times or more. Practicing, identifying, and entering a trade. Now, this single thing has been a dramatic turnaround for me and all of our people in the mentoring program. This is absolutely the only way to get good at something that you want to get good at. All right? So, you go back to, but downloading the data is such a hassle. You have to download one instrument and one day at a time. You wait and you wait and you wait and you wait and you sit there. Oh, I finally downloaded. Well, here comes your free gift. Everybody ready? Anybody that's a NinjaTrader user, got a free gift for you. We have created a downloader for you where you can go in and you can select all the instruments and all the days that you want and then click the download button and download them all at once. And it's free. All for you. This is our free gift to you. Go and download it from our website. There's the link. Lisa put that in there for you. And use the heck out of it. Now you got no excuses for not practicing. But you've got to have our indicators on your charts to practice with. So you might want to talk to Lisa about that. We're gonna give some away though. We're gonna give you some free indicators. Well, okay, they're not free. You have to buy something first. Our webinar special. We're going to offer, we used to just charge monthly for our trade room. And, you know, I used to think that people had the kind of time that I had when I was trying to, find a trade room that I could use to learn how to trade. And, I accidentally started this trade room years ago. Didn't mean to. It was a group of guys. We all shared screens via Skype. And they started inviting friends. I had friends, family members, whatever, all started. It just became big and cumbersome. And then we started using Makogo, and then we outgrew that, and we had to grow into something else. And I finally just said, I'll pay the monthly fee. And we got a meeting room. And that's how this whole thing started. That's how the Intentional Trader started. I started not sucking at trading anymore, and they started asking me what I was doing. Why don't you suck anymore? And so I started teaching them what I was doing, and that was the beginning. We are developing these indicators for, no, it'll only work for NinjaTrader, Lisa. You can download Ninja for free and use it free as long as you have data. Shoot, I forgot. That was the first time I read anything in the chat, and I didn't lose my place all day. The people that come into the trade room are members. We get a lot of people that will that signed up for a month-to-month thing, and so some months they couldn't come, some months they were on vacation, or they got busy at work, and so they feel like they just wasted their money. And people have very busy lives, and that's something that we didn't account for with just a month-to-month trade room type of thing. So we went back and we kind of reconsidered, well, how can we do this? So what we did is we came up with a lifetime trade room. You don't have to worry about month-to-month. It's a pay-once kind of thing. And for only $2,500, then you're done. You don't have to pay. anymore, and you come and go without worrying about, oh, but I'm wasting money because I got 2 weeks, I'm not going to be here, and then next month I got to go on vacation. Yeah. Anyway, so Lisa's going to offer this to you for only $14.25. See, I'm always the last to know about these sales. I'm learning about this for no, John. No, not $3.50 a day. This offer expires in 4 days. It'll last this. Yeah, I read it that way too. $14.25 for the next 4 days. After that, it goes back to $2,500. Yeah, it expires in 4 days. So $14.25, and then it goes back to $2,500. But this is lifetime. If you can buy a lifetime trade room license or a trade room membership for only $14.25 now. Then remember, I don't I don't always know about these specials until I start this presentation. I look up and it goes free indicators. Okay, so Lisa's giving away a free indicator, which is cool. And all you got to do is go to this page on the website, and after you purchase the lifetime trade room subscription, you can choose which indicator. You can choose which indicator you want. All right, here's that page. So here are the available indicators. Basically, it's everything we talked about today. We have a couple of others that we use in the trade room that aren't actually part of the PullBack that we were talking about. So any one of these, you're already going to get. Everybody's getting this free today. So everybody gets that. And then whoever decides they want to do the oh, Lisa, look at that. She's giving away 2 indicators. If you're one of the first 8 to get the trade room, you're going to get also the Obos indicator. And she's a lot more generous than I am. You're lucky she's in charge. The regular price of this Obos indicator is $165. These can range from, I don't know, over $400. Any of these other indicators here, whichever one you want. Now, this is something we did talk about right at the last minute. Because of the number of people that we had register and attend, we talked about a special on all the indicator packages, the package of, we call it our trade room suite of indicators. And Lisa's going to offer a special on that also. We didn't have time to put it up here. So contact Lisa about the trade room suite and also our VIP package. The VIP package is basically everything, one payment, done. It doesn't include the mentoring. Mentoring is a separate deal. But it includes all the indicators. It includes every indicator that we ever develop and use in the trade room. And just a heads up, there's one coming. I kind of showed you. You saw it on the chart a few minutes ago. It's actually going to be, it's already been given out to the VIP members, and they didn't pay for it. If you become a VIP now, you'll also get that one for free. because it's a part of the VIP package. So you get every indicator we have, every indicator we ever develop and put in the trade room and use in the trade room, and it's a lifetime membership of the, here, I actually have something here that'll make this a lot easier. Here's a comparison on the lifetime trade room. But these other packages that we talked about, we're going to offer the VIP package and the trade room suite. And if you want pricing on that, contact Lisa. But these are all the things that are included. We have a weekly educational series we call Aha Moments. All of our, we will log on to and remotely install and support your software and configure it to be set up just like the trade room. And as a VIP, you get priority support service. Sean, that's not a problem. You got my Skype address? It is the.intentional.trader. Yep, Praveen got it there. Ian, they do. Yes. I prefer them on a faster chart because they're giving me the information on the data that's coming into the market right now. And the only thing I know for sure is what's happening right now. I don't know what's going to happen 5 minutes, 10 minutes, an hour from now. But I do know what's happening right now. I tried all types of different types of charts. I tried all different time frames. And the only thing I knew for certain is the information that's coming into the market right now. I don't trade equities, Jonathan, so I really couldn't tell you. But I do have people that do, and they work great. According to them. Yeah, I got you there, Sean. We can talk after a while. I can't do anything right now, but maybe later this afternoon. All right, tell you what. I want to thank you all for coming. We are going to have our question and answer period. Some people don't want to stay for that because they can go off in any number of directions. It all depends on what you guys want to know about. So I'm happy to talk about anything to do with either my trading or what we do. I'm not going to go off into speculating about what might happen in the market someday or what's going on with the Fed or any of that stuff. I don't really care. I'm going to, I'll be happy to answer questions about my path to being successful, which is generally a pretty popular topic, or anything that we do specifically in the trading room. So if you can't come back, no, you'll get emailed, Nick, a username and password. So if you can't come back after our short break, which is only going to be like 3 or 4 minutes, I want to thank you for coming. Enjoyed spending part of your weekend with you, and I hope we get to see you again real soon.